this is forexbrokers.net, and we continue the videos related to how to trade gaps. We explained how the Western approach when it comes to interpreted gaps is, and what's the market expectation for gaps to be closed either during the same trading day on Monday or during the first trading week. There are some gaps that form also during the trading week, as it was the case with the Swiss National Bank in January 2015, when it decided, or it was forced to drop the fixed exchange rate on the euro Swiss franc on the 1.20, creating a huge gap, a gap that you would not see on the charts anymore, because brokers filled that gap with a huge bearish candlestick. But in any case, they do form rarely, but normally you will have this kind of gaps, and most of the recent gaps that we see are on the euro, because that we have are on the euro pairs, euro US dollar, because of the 2010, 2011, 2012 sovereign debt crisis in eurozone creating responsible for the market gapping either to the upside or to the downside on the Monday's opening. This one is the Macron gap, and the standard interpretation was to be closed in the first week, but the Japanese refers to gaps not as to gaps, but they refers to gaps as windows. And the theory out of Japan's technical analysis says that windows are either bullish or bearish. I mean, if the market was strong enough to gap higher, this window represents a continuation pattern. It's a strong bullish sign. The opposite is true as well. In a bearish trend, if the market has the power to gap lower after the weekend, it is a bearish sign, a continuation pattern in the same direction. This is one thing. Another thing is that these windows, the edges of these windows, when we measure the windows with these horizontal lines, the edges of these windows will represent strong support and resistance levels moving forward. One important principle when trading with gaps, and especially with windows, as the Japanese call them, is that the gaps or the windows are visible on all the time frames, and they have the same length. I mean, this is the gap from 0.732.7 to 0.837.6. That's it. If you have a look at the 4-hour chart or on the hourly chart and so on, the distance, the gap, the window is the same. And this is a very important argument in favor of what the Japanese Japanese say regarding windows, in the sense that they argue that these edges, the upper and the lower side of these edges, act as strong support and resistance for future price action. Always, from this moment on, for as long as euro US dollar hovers around this level 0.708, these edges will act as resistance or support. As we saw in the previous video treating the Western approach, the market did not feel here the gap for quite some time. It acted as the gap, or the window acted here as a support, and then it bounced from the support, making a new high. For anyone respecting the rules of a trend that called for a series of higher highs and higher lows in a bullish trend and so on, then the ability of price here to bounce from support and to put a new higher high is bullish, and gives room, or gives reason to the Japanese approach. Now let's move on forward to see where the market bounced from it, and we come to the current prices where the market closed the gap. But before closing the gap, focus here, before closing the gap, it came to the upper edge of the gap. Remember, these horizontal lines are here to stay forever. They represent support and resistance, and they change their role by the time that support is broken. It becomes resistance. Resistance is broken. It becomes support. But there's a catch. The catch is not to focus on the actual levels. I mean 0.837 or 0.732, but to focus on the area. So this is a 100 pips area that should act as a support when price comes from the upside, or resistance when the price comes from the downside. Period. That's it. Well, in this case, after the gap, we see the market broke high, moved high after the window, and for the first time that it hits the area, it should act as support. Well, it came here to 1.0780 into support, and then aggressively reacted on the support from 107 to 1.15. Now this is not by chance, because the disciplined trader, they uses the Japanese approach on interpreting gaps and interpreting windows, knew that this is an area with a strong bouncing potential, and knew this thing from 3 years earlier when this gap was appeared for the first time on the charts. Now the market bounced, but still the gap was not filled. Eventually it formed here a head and shoulders pattern. Take a look here. This is a left shoulder. The head reversed, the right shoulder moved lower. It filled the gap, and it found support now at the lower side of this window. You might say, well, it broke lower. Yes, but every time it broke lower, it had the power to come to 0.0732 and close about 0.732, eventually breaking higher. By the time that it broke higher substantially, everything below becomes support. So support again, and so on. So what do Euro US dollar bulls want to see from this window here? Well, given the fact that the market fell from 1.25 all the way to here, and this is major support, the bounce from this area should now break the series of lower highs. So this is a high, this is a lower high. The market keeps bouncing, but is not able to break this series. Unless it breaks this series, 1.0989 or 1.10, the euro is poised to break lower. But if it manages to hold this support area and to move higher, then the euro will most likely survive this test and will bounce higher. All because of an information that we have here, or a window that we have here for quite some time now, for 3 years to be more precise. Another example that I want to use is still on the euro and the US dollar. This is the Macron gap, the black lines that you see here. This is the Macron gap with the current price action that we've just analyzed. But this is a different gap, another gap. It formed from 1.3499 to 1.36. You might say, okay, who cares, because now the price is 1.08 and this is 1.34. You forgot the main role of windows. The support and the resistance levels, they remain on the chart forever. So if you use this interpretation of support and resistance, you should always have these levels on the chart. And maybe the levels are not relevant now, but back in time, this is the Macron gap from 2017. The price had nothing to do with this gap from 1.30 area. But back in time, this acted as support and resistance as well. This is a gap that formed in 2010 during the sovereign crisis on the Eurozone. We see that the market gapped higher and quickly closed the gap in the same trading week. So it filled the gap according to the Western approach, and the Western approach simply, or according to it, simply we don't have anything to do with this gap. But if we treat the gaps as windows, using the Japanese approach with the upper edge as resistance or support, and with this entire area as resistance and support, then we have information and levels moving forward for all the time when the price treats those levels. So the current chart should look something like this, and then every gap in the past should have a correspondence here, and the areas are difficult to be broken. So after the Macron's gap here in 2017 and the painful move lower for the euro bulls, where would the euro most likely bounce? Well, by the time that it reached support given by the window forming 3 years ago.